Check this on today.
Close the shop, let's take a drive. Take a break from 9 to 5. It's so great to be alive. Oh yeah. We could ride some roller skates. We could skate around the lake. If we don't know how we'll fake it. Oh yeah. Strolling, strolling. We can have fun just strolling, rocking, rolling. Oh yeah. Let's forget about the time. Let's relax and ease our mind. We deserve to just feel fine. Oh yeah. We can stroll the mezzanine.
Good morning, and good morning. Uh-oh. Good morning and good morning again. Welcome to Secure the Bag with your host, of course, me, Stephanie Beard. It is February the 13th. Now, I don't know if you believe in these type of days, February, Friday the 13th on top of it. So it is a Friday, the 13th. Um, and today we are going to try to secure the bag with this crazy market going on. Let me get into my photo here. All right, overlay. I'm still getting used to doing this. I'm sideways now. Let me go back to landscape so I can, or to portrait so I can see all of my pictures here. Okay, there we go. Good morning, you guys. Here I am. Good morning. Um, all right, all right. What's happening in this market right now? That's what we're going to talk about today, and explain in a way that everyone could understand. Yes, I did something maybe a week or so ago about the market crashing. The market is still going back and forth, and it is crashing. It is still crashing, and it's due to a lot of factors, and that's what we're going to talk about today. But before we get into that, of course, I got to put my disclaimer up. This is not this is not financial advice. I am not a licensed financial advisor. Everything is for educational and entertainment purposes only. Um, Please, when you do trade, trade at your own risk tolerance. It is all because at the end of the day, you've got to be accountable for what you trade, not of what I mentioned here or what I said, but you have to be accountable on what you're putting your money into. So, with that being said, welcome, welcome back. Now, what we learned the market, so we don't fear the market. We don't want to fear the market because if you look at your portfolio this week and saw more red than green, and I mean, I'm sure nobody did not just see all green. It was so much red. You're not alone. The market has been pulling back. And today we're going to talk about why markets drop and what it really means for investors. And I just want you guys to get a clear understanding of it. Do not be fearful of the market because remember, pullbacks are part of the game, not the end of the game. Okay? It's not the end of the game. And I'm watching, I'm not getting emotional. Some people, I had someone call me yesterday, they were so emotional. Oh my God, I'm in the red, Stephanie. What should I do? Look, I can't tell you how I just could give you what I will do. What I would do. Pretty much, you could do your cost average down. That's what I normally do. I buy it down and get my cost average down. But let's talk about what is really causing this market to drop. Well, one is Trump. We already know it's Trump and his dumb self. But there are also big three drivers behind the market that declines most weeks, including the interest rate expectations. They've been talking about the interest rates expectations. And this is when investors think that the Federal Reserve might keep rates higher for longer. And stocks often fall when that happens. And why? Because borrowing becomes more expensive, Growth growth companies become less attractive and investors move money into safer assets. And this is one of the most common reasons markets pull back. Another one is economic uncertainty. Markets don't like uncertainty. Things that can trigger volatility include inflation data. So if you've been watching Squawk on the Street and things like that, and Yahoo Finance, they've been talking about the inflation, job reports. The unemployment is horrible. Unemployment is horrible right now. The numbers are high, and also global tensions. I mean, tariffs and Trump and his dumb self. Corporate earning outlooks. Those are also part of why this market is crashing. Major economic meetings like the World Economic Forum. This is when investors feel unsure about their future. So they often sell first and then wait for clarity. And last but not least is profit taking. People are taking their money. It's like, no, I'm getting my money. I'm going to hold it. And sometimes that market drop is simply because stocks ran up too fast and investors are locking in their gains. They're taking profits and trades are repositioning. We talked about repositioning. Now, this is a normal market behavior. Don't get me wrong. This is very normal. And not every drop is a crash. But for the last two Fridays, it actually has been a crash. Because the first Friday I lost 8,000. This crash, and I somewhat recovered that $8,000, and then it dropped again this week, 5,000. So sometimes it's just really the market catching a breather. Um, you know, there are some important market moves in the cycles that moves in cycles, and we need to understand that. Expansion, pullback, recovery, growth gain. Pullbacks are healthy for markets because what they do is they reset valuations. They create buying opportunities and they reduce speculation. And it also strengthens long-term trends. That's why I said it's always when you do buy. That's why you're not doing options according to what to my schedule. I'm not teaching options because options are really risky, and you really need to understand the market price before you get into options. That's fast money, and it's also fast money to lose. And I don't think a lot of you guys aren't ready for that. That's why it's great to just get the stocks. When stocks drop, that's okay. You can go in, like I said earlier today, and cost average your money, your stocks down. So when it does go up, you are average at a low price. So, you know, new investors, you guys really think you really have to be careful when it comes to that. So let's go into my first slide. Let me get into it. All right, I already got that one. Let's get into that one. I mean, because, markets, they drop, and we already talked about interest rate expectation, economic uncertainty, uncertainty, and profit taking and pullbacks are normal. We already know that. Um, so we see that. That's what my flyer is saying right there. And market cycle, again, expansion, pullback, recovery, growth. That is the order that it happens in. Expansion, pullback, recovery, and growth. And then markets move in cycles. So discipline yourself with the timing. And what do we do when we do it? You just in this type of downturn. What you do is you really just try to stay as calm as you can. I know you could become emotional, and people be like, "Oh my God, I'm in the red. What am I?" What goes down must come back up. And just stay calm. Reduce your position size. Again, cost average, reduce it. Hold your cash if needed. Scale into other positions. Now, me as being, I don't call myself a pro trader, but I do know enough to do calls and puts, and that's what's happening. And you don't know what that means yet, but I will explain it. Just a little brief right now. Calls and puts are options, and we did talk about that earlier in a brief moment when I first started the show. But puts are when people are going against the stock, so they're betting that the stock will go down to this price. So then that when they buy these type of options, that will knock it down if they are winning. So hold your cash if needed. You can wait and then scale into positions, and always focus on long term strategy. That is always the key. Always think long term, 6 months, 12 months, 20, 36 months, things like that. You can hold these stocks as long as you want. Now, what's moving the market right now? As we said, the interest rates, and investors are watching whether the Federal Reserve will cut those rates. If they cut them and keep them higher longer, guess what? The market is going to stay where it is. There's also a issue with big tech sell-offs. Big techs, and we know that SPY is a basket full of tech tech stocks. So large tech companies often lead market. They often lead market movement. And recently, tech heavy indexes like NASDAQ, and we talked about NASDAQ. Remember what NASDAQ is? Uh, that's all the top tech stocks. That's telling you the forecast on all the tech stocks on how they're working. So NASDAQ has not been good. NASDAQ have been under pressure, which pulls the broader market down with them. And when the biggest companies drop, the indexes drop. And the indexes again are NASDAQ and S&P 500. We talked about that on Monday. Now, global trade and policy. We know that Trump is doing the tariffs. Nothing hasn't come down. He's not negotiating. A lot of these other like China, like Canada and all these other places that he have these high tariffs on. Trade tensions can also shake investor confidence because they can increase costs for companies. They slow down the global growth and they create inflation pressure. And that kind of uncertainty has already triggered market volatility in 2026. So you just really, guys, it's just been so emotional on the stock market. But again, if you stay disciplined and you stay patient because market drops are normal. Every year the market pulls back at some point. And what scares beginners is volatility. But experienced investors expect it. We expect it. Again, we were 2 weeks ago, we were high and mighty, all in the green. You know that it is going to correct itself eventually. And the market doesn't move in a straight line, it moves in cycles. That's what it does. It moves in cycles. And as you can see, these are cycles, quadrants. If you look at the slide, these are cycle crashes, feel emotional, but markets are mathematical. Fear is only temporary, and time in the market is what builds wealth. So, understanding what really moves the market is what you really need to pay attention to, because when you learn that, then you can move strategically. uh, mm. Red downward charts, arrows will with investors watching calmly. They're not panicking when they see the downward chart. They're not panicking. So that's what you need to learn. Don't panic. Do not panic. Just don't panic. Stay very just stay calm and look at the market psychology here. Fear is going to cause selling. It's going to cause people to sell. When they're scared, they're running. And news spreads panic quickly. So when you're watching Yahoo Finance or Squawk on the Street, or you looking at your Seeking Alpha um, uh, content, people are panicking quickly. Just stay calm and please stay disciplined. Large investors reduce risk, and prices will drop fast when buyers disappear. So again, just remember, markets don't just move on numbers; they move on confidence. They move on confidence. Um, I just know that economic slowdown, recession fears push markets down. Job growth slows again. Like I said, if you've been listening to the reports out here, unemployment is high as heck. It's high. And some companies, their earnings are not hitting the mark based off of these tariffs, so their earnings are declining, and investors expect weaker profits. And if companies are expected to earn less money, stock prices will fall. All right, but we do know that market drops again. I said it enough. I haven't said it enough. Actually, market drops. Um, they move in those cycles, and so again, don't panic. Smart investors don't panic. Avoid emotional decisions. Don't be emotional when you make a decision when you're purchasing. Focus on long-term strategy. Long-term strategy is always the great way to go. Look for opportunity. Look for the opportunity because again, silver went up to 107 and it dropped all the way down to 60 something dollars. Man, market drop creates future winners. So just keep in mind those sometimes the economic it's trying to help you and it's trying to get you to where you want to be in your portfolio because economic slowdown is just going to happen. It's just going to happen. And when companies are expected to earn less money, stock prices are going to always adjust. That's just how the market moves. And then again, it moves in cycles. And I just want you guys to know when it moves in cycles, just be prepared on when it does. All right. Now, the investor mindset, just think like this. You got to think the mindset again. Stay patient, stay disciplined, avoid the emotional decisions. All right. Um, let me get out of this slide. You know how I got there. Yeah. So let's get into my plays. It's 7:15. We're gonna get into the plays because silver is big is big part of my plays that I've recently made profit off, but also lost. So the money I put aside for taxes on the profit that I did make is just going to offset it because I've lost also. When I had the February 20th options, which I still do, February 20th is next week, unless it does a big turnaround, which it could be. I know I'm going to make my money. The money I put in, I will get that back. I only put in 300 something dollars. But I could have sold both of them and made a great mint off of it. I only sold one. I made good, still a great profit off of it, but I also lost from the profit I had, which is fine because it will offset my taxes. So I don't have to worry so much with that. But silver prices surged dramatically. They just surged, and investors look for safe haven assets during economic uncertainty. So, pushing silver to record levels earlier this year, silver has it just really outperformed a lot of these stocks here, which attracted new traders and speculation. But silver, again, you guys, silver is needed. It's needed more than gold. It's needed more than platinum. It's needed more than all precious metals. So silver is going to always bring you a good profit. And this is paper silver. There's also, I do recommend buying the actual silver, whether it be in the coin version or the bar. But you got to make sure that it's bullion. It's coming from a company that has bullion in their title because some of these precious metals be having other stuff in it. It's not fully 100% silver. Just a little tidbit: you can purchase silver from Costco. Yes, you could purchase silver from Costco as one of the good places, and it sells out fast. So you just got to, if you're a member of Costco, just keep going to their website and checking to see. But I'm gonna tell you, that is the first place you want to go to buy silver, Costco. But it goes fast, so that is a little tip for you guys. Back to the silver. When you're trading silver on Robinhood or Thinkorswim or Woolly Bull, just remember that it is paper. It is not the actual metal, but still, it is still going to make you some money at the end of the day. And silver really isn't crashing because silver is not work. Silver is correcting. That's all it's doing. And like I said, precious metals move in cycles, and silver is one of the most volatile commodities in the market today. So I love silver. I own the stock and I own the options because I know that silver is in a heavy demand, and but it will react to both economic fear and industrial demand. So just be careful when you are getting in it. But like I said, it's down right now. These prices are great to have right now. These prices are really good. So let me get into my trades. Like I said, I trade on Robinhood and I trade on Webull. And my portfolio on Robinhood is the biggest because that's where I started. But within this month alone, I um I profited close to $9,000, $10,000 just in from January to where we at now. However, I have also lost. Last week I was down 8,000, but then I recovered, and then I was down at $1,000. Now I am down $5,886 within this month. This is from the month over the month. However, it will recover. It's done this before. I'm not panicking. I'm not upset. I'm not fearful. I'm not none of those things. Like I said, on silver, I have options on silver all the way out to March 20th. I have one that will be expiring next month. Um, I'm not going to make as much as I could have made on it. I made a good mint on selling one of them, but the other one I should have sold at the same time. My mind, I don't know why. I thought that maybe it would just stay there and just thought, I ain't gonna lie. And this is one of the things you don't want to be on when you're trading stock. Don't be greedy. Sell. And I think I got a little greedy. So that's why, and this is what can happen when that happens. Take profit, you guys. Just take it. So right now, that option, February 20th, I'm going to make what I put in, which was $350. I'll get that back and maybe a couple of few $100 on top of that. So I'm fine with that. I'll just put it. I may not put it back in silver, but I am going to put it back in the market. I'm not going to take it out. I do have an Irene um, option. I have two of them. It doesn't expire until March 20th, so it is also down. Irene is a $50 stock, you guys. It is down to $42.06. It is one of the top five stocks that I have been telling you about that will build your portfolio. Right now, it's up $1.90. But it's only $41.87. It normally hits between $50 and $60. It got as high as $60. So um the market will then change again. This is where the market is just down. It's going to go back up. It's going to go back up. So I'm not worried about these options that expire in March 20th. I definitely will profit off of them, and I definitely will get back what I put in it. And what I put in it is money that house money that I've had already in profit. I'm not taking money out of my savings account. This is where I want you guys to be. I want you to be where your portfolio, where you don't no longer have to take money out of your stock money, so to speak, because you're going to build up your portfolio. Again, Lyft is so down, you guys. $13. Lyft is $13.28. Lyft is $13.28 right now. Okay. It was up to 16, and we do know that. Lyft is down. Let's get into APLD. I think APLD was doing okay this week. But however, it is still over a $30 stock, I believe. Let me get Apply Digital. Yeah, it is. It's at $35.49, but it is a $50 stock. The target is $50 for all of these stocks. The next target. So right now it's $35.65. This is where opportunity lies for beginners. This is where your opportunity lies. Let's go to SoFi. Let's get into SoFi. SoFi Technologies, it is down to $19.66. It's only $19.66. If you take $100, that's five stocks that you have in SoFi. Because SoFi is going to, the next target is $30. And then after that is $50. And then after that, it's going to move slowly. Again, SoFi and Lyft will move slowly, but it's going to get to $100 eventually. And we're talking long term here. We're talking long term when you're trading on here. IONQ, guys. I thought I had that in here. IONQ. I thought I had it saved under my watch stocks, but I should have. I don't know how it did not get in there. IONQ. IONQ is down to $32.46. It is a $50 stock. It has reached $50 before, and it's up $1.18 right now. So again, the market is where it is due to the news, the earnings, and the uncertainty that is causing this situation. And the uncertainty, and Trump, he likes to look good. He likes to look good, and people, his rating has dropped. It should always be below 10%, but it's higher than 10%, because of course he got the MAGA people that stand behind him. But today, I'm looking at the market today. I'm looking at Squawk on the Street right now. There are certain companies that are in the green, like Roku. I own Roku. Roku is up right now. It is up to $90. It is up. What did it just say? Let me go to my portfolio. I own that on Webull. Um, but I own that. So there are some stocks that are in the green today, even though the majority of the stocks and tech stocks. When tech stocks happen, it's a problem. Moderna is up. It's up 5% right now. I used to own Moderna. I don't anymore. Um, and let me get into the Roku right quick. Where's my Roku on here? Yeah, right here. Roku. My average price is $41.94. It is up to $90.18 right now. Yes, it is up 8.61%. I own 15 stocks. So there are stocks that are up. So don't be fearful, you guys. Just don't get fearful. Do not get fearful. Stay calm because the market will make you emotional. Like I said, when I was speaking to my friend yesterday, I was like, listen, don't worry about it. He got pretty emotional. And he's a man. Mm. Not saying that men can't be emotional because they should be. They should always be who they are. If you're upset, but he did calm down and he did make some correct moves. Mm. So stay calm. It is Friday. The market is going to open back up on Monday. We're going to start all over again. That's where we build the bag. And Friday is where we secure that bag, you guys. So just stay disciplined. Um, Let me see what else is up. And I talked about this penny stock, you guys. Penny stocks are good. Do your research on penny stocks. One being WULF. Wolf. WULF. I'm going to tell you what that. I bought it at $4.88. That's my average cost right now. I probably bought it lower than that. Let me get into what Wolf is. So you'll know. When you go to Robinhood, you can find out immediately. Good morning. Good morning, Dallas. You can find out immediately who these companies are, and especially when you go to Yahoo Finance and look them up. You see all their you see everything. You'll see the earnings. You'll see all their numbers, their P&L. Everything is right there on Yahoo Finance. You just got to maneuver around it, and then there's conversation. You can't always believe what people are saying there because there's always bullish people in the chat, and there's always bearish people. They're always going against each other. It's a competitive thing. But TerraWolf, WULF, TerraWolf. TerraWolf, you guys, owns and operates fully integrated environmental clean Bitcoin mining facilities in the United States. And TerraWolf will generate domestically produced Bitcoin powered by nuclear, hydro, and solar energy. Now, the company was founded by Paul Prager and Nazar Khan on February 8th, 2021. So they only been in business 5 years now. And it's headquartered in Easton, Maryland. And so today, it shares a 5.3% rise today amid strong analyst support and infrastructure expansion, boosting growth outlook. So a lot of analysts are looking at TerraWolf, and they believe that TerraWolf is going to be a very strong company going forward. Because they have infrastructure acquisitions. It just acquired 2 brownfield sites in Kentucky and in Maryland on February 2nd, adding approximately 1.5 gigawatts of power capacity. And these sites expand the company's portfolio to about 2.8 gigawatts, supporting its strategy to deliver scalable energy and advantage infrastructure of AI and Bitcoin mining workloads. So that's why the analysts upgraded it. And that's why it's still in the green, even during these times of the market being down. So again, you guys, there are other stocks in here that will stay green. But don't get me wrong, I haven't seen TerraWolf go in the red yet since I purchased it. $4.81 is what it's at. It is at $17.29 now. I bought it at $4. It's up $1.36 today. TerraWolf. That's also I'm gonna throw that in as a bonus stock that you guys might want to look into. But as you can see, that it had made some acquisitions today, and analysts are seeing it. Oh, I gotta go, you guys. But I want to thank you guys for tuning in. I appreciate you being here and supporting Secure the Bag. You can always come back and watch the show. We're gonna get up out of here, y'all. Let's see, where's my other music? Where's my outro? There we go. All right, y'all. Peace out. Have a great weekend. I don't celebrate Valentine's Day. It's a pagan holiday, but have a great weekend, you guys. Peace out.
Love of money.
Okay, my music.
Have a good one, y'all.